welcome everyone, and a very warm welcome to this very special show. And I'm your host, Ruchira Sharma. With growing uncertainties in the job market and plummeting interest rates, millennials are keen to have more than one source of income. And online trading is a preferred route for creating a passive income. In fact, there has been a record growth in trading accounts, with more and more investors getting keen to dabble with online trading. Most of them want to know more about how to get started with their online trading journey in order to give wings to their aspirations. And with this aim, Network 18, in association with Binomo, a modern trading platform, has launched Binomo Giving Wings to Aspirations. Through this discussion with leading industry experts, we hope to not only address all the myths and rumors about trading, but also enable new investors to decode investing in equities. So, if you're wondering about how and where to begin your trading journey, the things to keep in mind, the do's and don'ts, then this is just the right space for you. As we have with us some of the best experts from the financial realm to address all your queries. So, before we dive into this insightful conversation, I would like to introduce our esteemed guests. I have with me Mr. Kunal Tip. He has been a trailblazing momentum investor in high performance stocks for more than 2 decades. He's also a highly respected commentator on India's top business channels and has been demystifying investment and trading to enable new investors make smarter and better investment decisions. We also have with us Mr. Sudip Bandyopadhyay, currently the Group Chairman of Indie Trade IRG Group of Companies. Sudip is a gold medalist from the University of Calcutta and is also a qualified chartered accountant with more than 32 years of rich and diverse experience in various areas of finance and financial services. And we also have with us Mr. Siddharth Sidhani, Head Senior VP Equity Support and Product Sales at Anand Rathi. He is MBA Finance and holds more than 15 years of experience in equity advisory business. He has been successfully managing equity products and portfolio management in the past and worked with organizations like Share Khan. He is also a leading industry and equity expert. So, welcome, gentlemen. Welcome to the show.
Thank you. Thank you so much.
Thank you for having me.
It's great to have you here with us, and we have lots of questions coming up your way. So, Siddharth, could you take us in simple terms of trading and its key benefits? And do you think it's safe for everyone?
Well, thank you for having me on the show. Overall perspective, trading is definitely safe on the online platforms. Only one thing one has to look at is how much risk and how much reward they are getting. One has to keep a equilibrium between risk and reward. Overall
Mhm.
perspective, what we believe is two main pillars of investments and trading are there today. One is technology, and the other is understanding and the knowledge, which you call
Okay,
it as an analysis. So, techno and knowledge, both going together, always benefits the trading community.
definitely. While trading is welcoming, as it has low entry barriers, a trader must learn to adapt to changing market conditions and prepare for volatility. So, if we zoom in the lens on online trading, could you really tell us in basic layman terms how does trading really work?
Well, I think, as you rightly said, there are hardly any entry barriers, and it's pretty much easy. One needs to open three accounts. I'm assuming that everybody will have a bank account. So that's
Mhm.
one. The other is a demat account. You open with a particular depository participant. It may be a bank, it may be some other player, maybe a broker. But the depository accounts are either with NSDL or CDSL. So it has to be a CDSL or an NSDL account
Mhm.
being maintained with a bank or a broker. The third is a broking account, obviously, because you need to trade. So for that trading, you need to get registered with a participant of the exchanges, member of the exchanges, either of the exchanges, which is Bombay Stock Exchange or NSE, National Stock Exchange. So with
Mhm.
these three accounts, you are ready for trading. As we are discussing predominantly online trading here, so what happens in an online trading setup is that these three accounts are interlinked, they are linked, so that the trader or the person buying and selling can seamlessly buy and sell stocks. So what happens is when you are buying stocks,
Mhm.
obviously your the app or the system is checking whether you have adequate funds in your bank account or in the account which where you have moved money from the bank. In case your participant, your broker is not a bank, you would need to move money from your bank account to the broker's account, which is your account with the broker. Once you
Sure.
have the money in the bank account, assuming you have money, the shares will be bought for the quantity you are seeking. Once the shares are bought, with the process of the exchange and the clearing house, within a period of 2 days, your share will get credited to your demat account, which is being
All
maintained
right.
with the broker or the bank concerned. In case
Mm-hmm.
of this, the reverse process applies. The app or the system checks whether you have the shares. If you have the
All right.
shares, the sale goes through. Yeah.
All right. So, Mr. Kunal, coming to you, take us through the basics of trading and what should one know before investing?
See, I think thank you so much, Uchira, for having me here today. I think first thing is that there should be some differentiation between trading and investing,
Mm-hmm.
although we use these words interchangeably, but they are two different pursuits altogether.
All right.
Trading is something where you're trying to generate regular income from the market using the market volatility. And investment is something which is slightly more passive in its nature. And that is something that almost anybody can do. Trading is something which is more specialized, requires more time, more focus, and you need to learn it well before you can actually get into it. We have a huge amount of traders in our country. And as you rightly said in the introduction, because of the lockdown, because people got a lot of time on their hands in the last couple of years, a lot of young people are now becoming traders. So trading
Mm-hmm.
is something which, of course, requires a lot of learning. It is something. It's like a skill. You have to learn to do it, and if you can, and of course, a lot of technology and knowledge goes into it. But if you're able to do it, it is something which can be a wonderful alternate career, which can be a wonderful second career. So it's a tremendous thing, but requires time. Investment is something which almost anybody should do, and we all invest in one way or the other. So I think the first thing is to understand whether you're a trader or you're an investor or you're both.
All right. Thank you for sharing that. That was a very interesting insight there. But Sudip, coming back to you, what are the rumors about trading that you deem important to be addressed?
Well, I think the biggest problem in the market, and particularly for new investors, and I would say not traders who are not seasoned, is
All
that
right.
they get swayed by rumors.
Mm-hmm.
They hear, some rumor from their friends, from their neighbors, from their, associates, and it does
Mm-hmm.
circulate through multiple social media platforms. And based on these rumors, they go ahead and take positions. Uh,
All right.
More often than not, I think these turn out to be disastrous, and
Mm-hmm.
they lose money and then they lose faith in the market and move out of the market. That has been really, really sad. What we have been advising consistently, all traders as well as investors, is that uh, you need to understand the market. You need to understand things yourself. Don't rely on rumors. If you are planning to rely on somebody, trust the experts. Go to some expert who can advise you appropriately. On the other hand, if you want to do it yourself, absolutely no problem. But spend little time understanding the markets, understanding the rules, understanding the way the market behaves, and understanding obviously the market mechanism before you
Mm-hmm.
jump into trading or even investing. So one has to
Definitely.
be really, really careful about not getting swayed by rumors and
Mm-hmm.
kind of falling for these kind of mischievous things. Uh, I think the
Yes.
regulators, including the
Mm-hmm.
exchanges, have been warning the investors continuously about the dangers of these rumors and social media generated messages. So that's one point
There's
I
so
would.
much of that.
Yeah,
Definitely.
yeah,
Yes. So, Mr.
yeah.
Siddharth, what about you? What is your insight here? What are the do's and don'ts of trading, especially for new investors?
Well, Ruchira, do's and don'ts are a big list. Don'ts are very simple that don't get swayed away, as Mr. Bandapadhyay just rightly pointed out. But do's are many things because,
Mm-hmm.
see, markets, investments, or trading is all about knowledge, and you have to put in your entire thing into it. One thing which I
Yeah.
would like to always point it out, that on
Mm-hmm.
the online platform you get a lot of fusions, but research is what which is available in the on the online platforms, which you have to take a lot of cognizance of. Added to that, you have to keep understanding the sentiments of the overall markets, because at the end of the day, sentiments also matters a lot. And if you are a long term investor, maybe the sentiments are different, and if you are a short term trader, the sentiments are different. So I think sentiments will also play a major role, that you get into research completely and you evaluate things well and then go ahead. Overall perspective, definitely of one's own reading is something very very important. Added advantages, you get an advisor who is advising.
Great. And Mr. Kunal, would you like to add to that do's and don'ts of trading or any rumors or myths that you think we should spread?
Well, I think, like you said in the beginning, it's easy to get into trading, but it's very difficult to survive as a trader. It has got a steep learning curve. It takes time to actually understand how it functions, and very few people have the time or the inclination to actually go and learn this before they actually put their money on the line. So, my advice to anyone watching today would be to first learn this well, give it some
Mm-hmm.
time. It may take like 6 months to 1 year for you to understand how it functions, and
Mm-hmm.
then put your money on the line. It's your hard-earned money at the end of the day. So before
Absolutely.
you fall for the fancy idea that you heard on social media, like Mr. Bandyopadhyay said, it's
Mm-hmm.
important to actually learn it. And once you learn it, it is a life skill. It's a life transforming skill, which can completely give you the ability to continue to generate income for a very long time and create huge wealth for yourself and your family. But it takes time to learn, and that is what I think should be the focus.
All right. So clearly ratify all the information that you get and do your research well. That is the advice from my experts here. But moving on to the next question, which is a very common question. What are the market hours for online trading, and can investors trade beyond market hours or not? So, Mrs. Siddharth, you could take that.
Well, beyond market hours, there are different markets which is there, which is available. Of course, equity
Mm-hmm.
markets are till 3:30. You have commodities and currencies which last one till 5 o'clock and one till midnight. So, of course,
Mm-hmm.
there are a lot of opportunities beyond markets. But added to that, there is one stream of investments which is very very common in today's world, is unlisted and pre-IPO investments also, and unlisted
Mm-hmm.
pre-IPO investments, because today with the kind of IPOs, different platforms, different businesses, different sectors which is coming in the
Mm-hmm.
markets for the IPOs. I think I think more and more unicorns and startups are also coming up. So there are a lot of pre-IPO opportunities available which you can always explore. But mind it, pre-IPOs are once the IPOs get listed, 6 months lock-in
Mm-hmm.
is there as per the regulations. Added to that, one has to keep an eye that pre-IPOs are can be looked at as a unlocking value generation rather than trading perspective. It is a long-term 2 to 5 years perspective one should look at. So of course there are a lot of opportunities available beyond the
Mm-hmm.
markets.
Definitely. Mr. Sudip, would you like to add to this? The advice
Well,
here?
well, to Siddhant's point, I think there are opportunities beyond the equity market. As he rightly said, the commodities, the currencies, and the unlisted universe. But for the
Right.
for the investors, there is a new category which has now opened up:
Mm-hmm.
opportunity of trading in global equities and global asset classes. So
All right.
there are schemes under which regulatorily you can take a certain amount of money abroad every year
Mm-hmm.
and you can trade or you can do what you wish to do. So under that category, a lot of people do trade outside the domestic trading hours. There are, of course, asset management companies who have floated schemes which invest in global assets as well.
Mm-hmm.
So there are opportunities. But Ruchira, I would mention here that this is for expert investors. This is for seasoned traders. This is not for the
Absolutely.
beginners. This is not for the people probably we are talking to today. And I
Mm-hmm.
think for them it would be better to kind of restrict to kind of little less exotic variants of trading.
All right. So that actually brings me to my next question, that what kind of equities should new investors avoid? Mr. Kunal, you could answer that.
Yeah. See, I think what you should avoid definitely is penny stocks. That's a real trap. and
Mhm.
that's where most retail investors begin their journey, is because they seem very cheap. So, for instance, a stock that trades at 2 rupees a share
Mhm.
seems like a very, very good bargain. But the experience tells you that those stocks which are trading at those low valuations tend to have a
Mhm.
lot of corporate governance issues, other issues. So it's always important to stick to known names, the bigger companies. That's where you should begin. And it's
All right.
only when you understand the markets well and you spend some time here that you
Mhm.
should dabble into stocks which are slightly more risky. So stock selection, I think, is very critical. Stick to the known names, bigger companies to begin with.
Sure. Any inputs here, Mr. Siddharth and Mr. Sudhir?
Yeah. Yeah, I would like to come in here. I would completely second the thoughts of Mr. Saraugi on this. But added to
Mhm.
that, I'll just put up a point. When
Mhm.
you go for a penny stock or a small little 2 rupee, 5 rupee stock, the entire market, and there are a lot of noise around that this is a great stock. So you
Mhm.
have to avoid and overcome that noise, because
Correct.
in that situation you will get a surround sound that this stock is fabulously well and all that. So you have
Mhm.
to be very good stock picker and avoid those penny stocks. Look out for, if you are a new investor, look out for Nifty 50 stocks, and if you are a good seasoned investor, then also look out for a mid cap which are quality, strong pedigree, and a strong management.
All right. Sure. So that was a great insight over there. Mr. Sudhir, would you like to add to this?
Well, I think Kunalji and Siddhant has pretty much covered
Mhm.
what investors should and shouldn't do. I would reiterate that they should definitely, if they are talking about investing, they should consult some advisor, do proper research, and then only get into investment. For trading, also, I think the same applies. That's for the
Mhm.
beginners. Then once you learn the ropes, maybe you can start experimenting by your own research. But
All right.
initially, when you are starting, it's always better to go with the experts, take their advice, and do it. Learn the ropes, and then start trying yourself.
Great. So
Even
all of you agree on the importance of research. So what is the best way to research equities, and how does one really find out which are the equities in demand?
Well, I think the way I may start this, I think there are enough and more avenues to do this research nowadays, Ruchira. I think your sister channels, talk about the market and the corporate developments throughout the day.
Mhm.
There is this money control website. There are multiple other websites as well where you can go and do your research. There is the BSc NSC sites, which pretty much covers all the listed companies and their latest financial results, corporate presentations. So there are multiple areas. Of
Mhm.
course, you need to also read the business newspapers and journals to find out what's happening around you. So yes, there are multiple ways of doing it. You can choose your way, but there is no substitution to
Mhm.
gathering knowledge if you want to do good in market.
All right. Sure. So, coming to you, Mr. Kunal, we talk about financial analytics tools. So, how can they help investors determine their goals and make the correct investments? And what is the right way to go about it?
Well, Richard, over the years, I've seen a lot change for the better. And I
Mhm.
remember when I first started as an investor, things were very difficult. You didn't get data very easily. There weren't too many websites where you could go see charts for the Indian markets. But now things have changed dramatically. Over the years, we've seen that Indian market charts are now available very easily. A lot of fundamental data, very well organized and very easily accessible. Wonderful charting tools,
Mhm.
and that I think is a very welcome thing. So you have all the information. In fact, you have a bit too much information at times. So from a
Correct.
retail investor, from a young investor's perspective, I
Mhm.
think there's absolutely no dearth of information. It's only that you need to be sure about what you're going to do with it. Seek information from the right sources, use it well, and I
All
think
right.
you'll be able to make some very good decisions.
Great. And Mrs. Siddharth, would you like to share your insight here or your inputs on this one in terms of financial analytic tools and achieving their goals? You know, when new investors are beginning their journey, how do they achieve their goals?
Well, both the experts have rightly touched upon, but still to add up, is experience has no replacement. That's point one. And second, for a new or a old investor, one has to, if one is looking for investments in the market in stocks, the Bible has to be opened, and that is
All
the
right.
annual reports of a company.
Mm-hmm.
Because annual reports gives you a right perspective, and if you want to dig down in the annual reports, the management discussion analysis is also, if somebody doesn't have a much of a time to dig down all the P&Ls and balance sheets of the company, then go to the
Mm-hmm.
management discussion analysis and just read through of what are the plans of the company and what is the company's vision going
All
forward.
right.
I think that can help. Slowly and steadily one has to garner that experience within themselves.
All right. And what is the best place to get the company's financial report and other such information that is relevant for new investors?
Well, of course, National Stock Exchange, BSC, both the exchanges definitely has all the financials of all the listed companies. Added to
Mm-hmm.
that, you can go to the company's organization's websites. You get the investor section out there, and you can download those annual reports from the company's direct website also. So these are few authenticated sources which are available.
All right. So just before we wrap up, one last question for each one of you. We're talking about giving aspirations to dreams and also generating a regular passive income. So what is your tip or takeaway to new investors on how to get started with an online trading journey in order to give wings to their dreams? So Mr. Sudip, you can take this first.
Well, my thought, Kunal and Siddharth may have a slightly different view. I thought somebody who's entering the market, initially you should start with making investments.
Mm-hmm.
Trading is something which requires a certain amount of expertise, and I think Kunal brought out that point beautifully initially. That pretty much everybody can make investment. You are anyway making investment one way or the other, may or may not be in equities. So start by making investments after seeking proper advice from an investment advisor, and
Mm-hmm.
start your journey. Learn the ropes, and once you have kind of confident about the operating environment, then
All
only
right.
venture into trading. And even when you are venturing into trading, initially seek advice of experts and do it. After a period of time, start your own journey.
All right. Great. Mr. Kunal, what's your tip here for new investors?
See, my big advice would be that first thing is that it's not something that you can learn overnight. It will take time. So first thing is to be patient. Second thing is to keep your rein in your aspirations. Is because I've seen a lot of retail investors falter is because they take on a lot of leverage. I think leverage can be is something that should be best avoided in your early stages as an investor. So a lot of people get attracted to options and futures and start trading options and futures without having complete knowledge of how they function. They lose a lot of money, and then they get disappointed and absolutely disillusioned with the market. And that is a very unfortunate thing for somebody to experience. So my advice would be to stay away from F&O when you're starting. Learn
Mm-hmm.
this well, give it time. Think of this like as if you're doing a course, and if you did your MBA or some other education course, it takes
Mm-hmm.
time. So give it a couple of years. And if you stick with it for a couple of years, I think you'd become a much better and more seasoned investor and a trader.
Definitely. So that what's your advice here?
Well, leverage is one point which is rightly pointed out. I think that
Mm-hmm.
should be avoided at the initial stage of your investments. But added to that, of course, systematic investment plans is one thing which a new investor can always opt in,
All right.
because early you start is better, and you can get the benefit of compounding also. But if you want to
Mm-hmm.
go into direct equities, I would suggest that there are a lot of tools which are available in the markets. One of them, likes of baskets. You get ready-made baskets, the thematic baskets which are available in the with different brokers and different platforms, which you can always opt in, looking and understanding the philosophy of those baskets. What are the horizons? How is the risk reward or the risk appetite which that basket is bringing in for you? I think those
Mm-hmm.
are the small steps a new investor can take for the success of their portfolios and investments.
All right. All right. Thank you so much, gentlemen, for sharing your insights. Clearly, the world of trading is a window of opportunity to create wealth if you're willing to take it. So you can make smart, well informed investment decisions, decide carefully which equities You should trade in and diversify your portfolio. And most importantly, as all our experts mentioned, research before you invest. On that note, we conclude today's session. I would like to thank our panelists, and we hope to have addressed all your queries. So, what are you waiting for? Go ahead and take that leap of faith. Happy investing to all of you, and thank you so much for watching.